Hi, and welcome to the Stockscores Market Minutes for May 29th, 2012. This week's topic, there is always a reason. I'll get into that in a moment. But before I do, a quick reminder that you can subscribe to my free weekly newsletter at stockscores.com/newsletters.asp, the address that you see there on the screen. All right, let's get into the analysis for this week. You know, there is always a reason why price is doing what it is doing. Unfortunately, we don't usually know the reason until long after the price action. It's only with the benefit of hindsight that we can make sense of what is going on in the market. You know, many times I have looked at a stock and said, what this stock is doing right now makes no sense. And yet, in the days and weeks that follow, as I get new information, it starts to make really good sense why the stock is doing what it is doing. We have to remember that there are investors out there who will uncover new information before it is widely known, and when they trade on it, they can create the abnormal activity that, to us, may make little sense. The point is, don't try to rationalize what is happening in the market. Just listen to what the market is telling you. As an example, I was quite surprised at how strong natural gas was through the month of May, because every news story that I heard told of how there was an abundant supply of gas and now how gas was likely to continue to move lower. Well, in fact, it broke its downward trend line late in April and rallied through the month of May, and as I say, it really made little sense. But today I was listening to some news reports, and it turns out that many electrical plants in the United States are switching away from coal and toward natural gas. And so while demand may not outstrip supply right now, certainly demand is expected to increase for gas simply because of that switchover. Didn't know that. Here it is 3 or 4 weeks after the move started that we're only starting to hear that information. All right, let's get into the analysis as we always do, starting off with the S&P 500. This still remains a bearish chart. Now we've had a little bit of an upward move over the last 5 or 6 days. In some ways, this is basically a flag pattern building in a downward trend. We do have those falling tops in place. First one in April, second in May. And so we shouldn't get suckered into the rally that has happened over the last little while, although I do think swing and day traders can benefit from that little bit of strength. But until the market is able to build a rising bottom and really break the bearish pattern that we see on this chart, I still want to be cautious with stocks. I do think in the short term, if you're a very short-term trader, you can trade the market from the long side, but I wouldn't get too bold about stocks just yet. Similar situation in the Canadian market. It remains in a bearish pattern. It really fell away from that downward trend line, and anytime price falls away from a trend, it usually comes back to the trend. Well, that's what's happening right now. We've had a few days of rally here, but we have not yet overcome the bearish pattern. And you can see on this chart that the sentiment stock score, which is the green line on the chart, remains below 50, and that is in a bearish zone. The VIX is an interesting chart because it really tells us a lot about what the market thinks is going on in Europe. And in recent weeks, we've seen the VIX rally, and I look at the VIX through the ETF based on it, called the VXX. But today that VXX ETF broke down from a little pennant, and that tells us that the market is less concerned about what is happening in Europe, and we may see some return to normalcy in terms of how the market treats Europe in the next little while. Now, we still have to remember, however, that the downward trend in the VIX has been broken. This is only a very short-term breakdown in the VIX, and we should remain cautious because, of course, the situation in Europe could flare up at any time. And, of course, with elections coming in Greece in the next 3 or 4 weeks, it's going to be a critical event for the market. The treasuries show somewhat similar position. Of course, money moves into treasuries when people are nervous about what is going on in the world, and we've certainly seen that happen in the last few weeks. But in the last week or so, we've seen the treasury market consolidate into a pennant pattern. Now, if it breaks down from the little triangle that I've drawn on that chart, it implies that people are taking money out of treasuries and moving them into more risky assets, most likely into stocks. Now that hasn't started to happen yet, but this is an important chart to watch. TLT is the symbol. Keep an eye on it this week as it is a sign of whether investors are willing to take risk or simply park in a risk-free asset like the treasuries. US dollars had a great rally on weakness in Europe, and it is now at some resistance where it appears to stall. Now, normally I would say that if the problems get sorted out in Europe, we would see the US dollar retreat. There is, however, a little bit of a change going on right now where people are starting to put money into the US economy simply because it is the best or the strongest or perhaps best improving market in the world. And so it's not so much a hedge against concern globally anymore. It is more starting to become, anyway, that thing that people are buying simply because it's doing the best. Although one could say that it's really the best among a lot of ugly looking markets. The gold market is one that I think is likely to go lower. I've been bearish on this market for some time, and certainly in the last little while we've kind of been going sideways, and I think that could continue for a couple of weeks as we bounce around support here. But looking out weeks and months, I think that gold is lower, and I do not encourage people to be a buyer of gold right now. Finally, we have the chart of oil, and oil has been beat up a little bit in recent weeks, mostly because the problems in Iran seem to be getting some resolution. And when one thinks about the global economy, really there's not a lot of strength there globally, so there's no real strong demand for oil. Oil was probably at an artificial high in March and April simply because of the events in Iran. And now that those are going away, we're seeing that premium come out of the price of oil. So I'm not overly bearish on oil because we are near some support, but I do think that oil is more likely to go lower than higher in the months ahead. Although in the very short term, we are a bit oversold here, so I wouldn't mind, or I wouldn't be surprised if we saw a week's worth of strength in oil. So I'm raising my rating on US and Canadian stocks to neutral, and that's really only because in the short term I think there could be a little bit of a pop here. I am still bearish overall in those markets, and I think that unless you're a swing or a day trader, you should remain pretty bearish on stocks still. What is nice though is that some of the signs that we're seeing is that the market is taking on some risk. There are some investors willing to take risk, and that means that individual stocks can do well. And certainly last week we saw a few names, mostly in the biotech area, that were able to do very well despite a bad market. So I think if you're a good stock picker and you're looking for abnormal trading activity, as I always do, there are some opportunities out there. As I said, I'm bearish on gold. I'm bearish to neutral on oil. I think that it may bounce back in the short term, but longer term it looks like it's going to go sideways or lower. Markets are trying to bounce back right now, and that is pretty good to see, but that bounce has been pretty unenthusiastic so far. Investors are starting to show some willingness to take risk, and that is a good thing. It may set us up for a little summer rally. And so I think we'll start to see some individual stock picks coming out in the next few weeks. Well, that has been the Stockscores Market Minutes. Hope that you enjoyed it, and I hope that you have a great week in the market. Trade well.